Attendees Ajit, Bhushan, Dhruv, VP. Okay, I think we are live, but I have a bit of connectivity issue. So are you able to hear me, everyone, properly? Yes,
Bit
attendees did
faint,
the
but I can hear
financial. Okay, thank you so much. So, guys, first of all, thank you so much, everyone, attendees who have joined in a short span of time because we have sent an invite an hour back to various students, and yesterday also there were some of the invites, and we are delighted to have Nimish Soni. As you know, he's the CEO of Eton Solutions and partner and chief operating officer. And I think Surya will kind of brief more about the profile about Nimish. But first of all, thank you so much, Nimish, for giving your time.
Sure.
You put your time on a holiday
Yeah,
and
yeah, no worries.
to address the students on one of the most important topics, which is wealth management, because that is something everyone is curious on. I would be more happy that even if you share ideas how to generate wealth, uh, apart from managing wealth, which is a very, very important thing, at least from the students' perspective, because we have a capital market group, which is stock market group separately at Simandhar Education, where we talk a lot about the investments and all. And it would be great to hear from you also on those views about the
Okay.
latest things. And about the attendees, I think you can put up any of the questions in the Q&A window, and Harish from our team would take it up accordingly and could answer that. Over to you, Teja. Thank you so much, Nimish sir, once more for
No
joining
worries.
us.
No, happy to be here. Thank you.
Yeah, thank you, Sripal sir. So, good evening, everyone. Thank you for joining us at another enlightening session by SEC on wealth management. Today, we have Sripal Jain, co-founder, Simandhar Education, and Nimish Soni, partner and chief operating officer, Eton Solutions. A little bit background about Nimish sir. Nimish has more than 26 years of global experience in banking and insurance industries. Prior to joining Eton Solution, Nimish has founded and grown a few startups before listing them or merging them into larger global companies. He scaled one of the startup from 15 to 5,000 over 7 years with customers and employees spread across US, Europe, and Asia. Set up India's first full service captive center for American Financial Group, providing end-to-end insurance operations and technology services. Early in his career, he has worked with Capgemini US as a consultant. At Eton Solution, Nimish designed and developed a proprietary implementation methodology that is providing clients with greater implementation experience while laying the foundation for rapid growth. Has set up global tech center in Bangalore, providing technology implementation and end-to-end services to all the clients. Set up CRM team to lead year-on-year growth from existing customers. We thank Nimish Soni sir once again for joining with us on weekend and sharing his insights on wealth management. In the meantime, if you have any question, guys, to ask sir, you can put it up in the Q&A window, and we shall take this at the end of the session. Over to you, Nimish sir and Sripal sir. Thank you very much for this.
Okay. I'm going to share my presentation. So you can, I think you have to, I'm not able to share. Are you sharing something? No, right? Post disabled participant screen sharing. So you'll have to
Zaki,
allow me to
Yeah,
share my.
sir, share now.
Okay, now I'm on. Okay. Okay, you can see my screen, everyone.
Yes, sir, we can see your screen.
Okay, good. Okay. So this is a very, the family office per se is a very niche market. I've tried my best to find material to, give you an introduction to it, and so apologies in advance if it is too high, too detailed, or if it doesn't. But I've given it a shot, so let's see. So I'll start with market segmentation. So wealth is very different when you talk to different people, right? So you talk to somebody who has 1,000 rupees. To him, person with 1 lakh is wealthy. You talk to somebody with 1 lakh and you compare that to somebody with 1 crore, then suddenly he's not wealthy. So it's a relative little bit, but let's have a look quickly here. So there is a category called very high net worth. These are people with 1 million. That's 7.5 crores if you convert to rupees of investable asset, right? So this is not your primary home. Besides your primary home, you have another million that you can invest. And that group is very large. If you see that number here, it's almost 27 lakhs worldwide. Okay. So 27 lakhs, roughly 3 million, you can say have 1 million and above. And then there's another group This group is now 30 million and above, right? They're called ultra high net worth, and there are about 3 lakh of them. So what was 30 lakhs became 3 lakhs. So 10% of those are basically 300,000 or 30 million and above. Let's look at the next group. The next group is, 1% of the 3 lakh. So if you go back here, we said this is 300,000 or 30 million and above. If I just take 1% of them, they're billionaires, what we call them, right? That 1 billion, is 1,000 million. So there is about 3,000 people here. Now these numbers are, could be 1 or 2 years dated. So it's quite dynamic that, people are coming in and out of the list sometimes, right? For various reasons. So now if I show you another slide that is an interesting perspective, on the left here is the population. The same numbers we saw earlier, a little bit here and there. So roughly, 2.9 million have 5 million and above, and then there is about 300,000 that is 30 million above. And the tiny red dot you see on the picture on the left, the tiny red dot is about 3,000 people. And on the right, you can see how much wealth they own. So if you just look at the billionaires, which is that tiny red dot on the left, they own almost $9 trillion today. Okay, 9 trillion. Each trillion, 1 trillion is 1,000 billion, right? And then if you see the gray area, which is the ultra high net worth, that is people with 30 million and above, that is 300,000 people worldwide, that they own 36 trillion, right? So together, the gray and the red own about 45 trillion, right? So that is our target market. Okay, their needs are very different, especially the box, especially the red there. The billionaire needs are very different. The challenges are very different. And there are some in the gray also that are on our target market, right? So that is just kind of segmentation as what is wealth management and who, I mean, not what is, but who are we trying to help here? So all these people have their own set of challenges when you have that kind of wealth, right? So if you look at it now, this I've just kind of broken it down by region, right? So North America again is a big chunk of it. Then there's Europe, Asia, South America, and Australasia. So and there's a growing list. Actually, the growth rate now in Asia is faster, or probably the fastest growth rate here is Asia, right? So you all know, in India and the Far East, there's a lot of new wealth being created. So let's ask a question. Why do people with over 500 million need a family office? So the whole idea here is we serve the family office. So what is a family office, right? So when you have, say, 4 crores or 5 crores or 50 lakhs or whatever, right? You basically, when you're dying, you just give it to your children and you go. But when you have 500 million, you just can't give it to your children and go, because that 500 million can't be consumed by 1 or 2 generations. So what you do to make sure that money lasts more than 1 generation is you set up a family office. Okay, that's the goal. So when you set up a family office, there are certain shared goals, vision, philanthropic purposes. They do some donations out of it, and they manage the wealth in a single place, because you all know that in any family, when you have 3 or 4 or 5 children, grandchildren, different people have different skills when it comes to managing the financial wealth. So when you set up a family office, you just protect the weak members so that they don't squander it and get into trouble, right? So that's kind of, and we have some clients that have a 7th, 8th generation in the family office. That is 250 people, and that is 7th cousin or 8th cousin. That means these are 130, 140-year-old family offices. And when beyond the 3rd generation, they don't know each other, but they're all linked together by the family office, right? The founding father 100 years ago or something basically said everybody's education should be paid, everybody gets a house, something. They've set up a set of benefits that his descendants will get. So you can imagine even the employees of family office are also now, have changed 4 or 5 times in the life in this over 100 years, right? And will the employees of the family office also work and their descendants work in the family office? I don't know. I haven't gone into that aspect. Okay. So what does a family office do? Meet family goals, right? Obviously, whatever is the goal, vision, setup, etc., the family office will implement it, right? It's an independent group of people, and they do the investment planning, tax planning, estate planning, make sure that everything is compliant to all the regulatory aspect, and all the operational aspect of paying the bills, and whether the school fee, house cost, house repair, any bill, everything is paid by the family office here, right? So there is a lot of activity that happens when you have family members spread over many countries and many generations, and governance and a facilitator. Sometimes there is an intergenerational transfer that happens, and there's quite complicated activities there, and the family office supports all that, right? And what happens, there's a saying here in the market: once you have seen one family office, you have seen one family office. In the sense, each family operates differently. Okay, so and there's a range of them out there. So let's look at some broad types of family office. Single family office. Okay, so if you have more than 500 million, typically billion and above, you set up a single family office. What is a single family? Means that team only serves one family. Okay, it serves a single family. So take an example, Ambani in India, right? They have a dedicated team, a family office that only supports their family, and they have thousands of crores in it. Same way, the Premji Foundation in Bangalore, maybe, and there are a number of them that serves one family. And then there's multi-family office. These are people with 30 million and over to 500 million. So if you have 30 million or 50 million or 100 million, it's too expensive for you to set up a dedicated team. So what you do is you go to an MFO, and the MFO serves more than one family. And so they divide the cost. They give you similar services as a single family office, but you don't get a dedicated team. So you have to schedule some time with them, and they will then give you all the service you want. And then there's something called virtual family office. This is all something coming up now, where the family office is kind of virtual, in the sense there's a technology that people in different locations who perform a certain service to the family office, right? So these are the three models, but the more predominantly is in the market of the first and the second, right? What is the key difference between the SFO, MFO? SFO is a cost center, right? It serves one family. So if I work for the Ambani, for example, in India, or Mark Zuckerberg, then Mark Zuckerberg's family pays me a salary and some benefit, some bonus, and then my team gets a salary. That's it. There's no profit. We serve a family. If it's an MFO, then one family did not set it up. Somebody who knows how to run a family office set up a multi-family office, and then he approaches people with 30 million, 100 million, says, I'll give you a family office service. You sign up with me. And it's a for fee, for profit organization. Okay. I hope I'm not going too fast. And okay, let's look at the next slide. Here, what I've tried to do here is just kind of put a picture together that says, who are the people within a family office? So this is not the family, this is a family office. There's a president, there's a CEO, or whatever you call them. They have a chief financial officer, there's a chief investment officer, and then there are sometimes controllers, investment managers, accountants, all that. And then on the outside, they have all the banks, custodians, financial institutions where they put the money, move the money, invest, etc. And then they also deal with auditors, lawyers, tax advisors, investment managers that are with Fidelity or Schwab or outside, risk managers. And then there are regulatory bodies, because they have money in many different products that require regulatory filing. So this is the universe or the world of a family office. They have to deal with the family members, they have to deal with the custodians in the bank, they have to deal with the auditors and the lawyers and the regulatory body. So it's quite a busy group of people. I think what I'll do is I'm going to stop share for a moment, and there's another picture I'm going to show you. So when I was introduced to Rob, our founder, CEO, and about 3 years back, I didn't know much about family office, and actually by education I'm an engineer, but I've been doing banking and insurance, technology and operations last 20 years. So I said, let me understand, what does a family office do, And I asked Rob, what do you guys exactly do? You know, a simple question. And Rob started talking, saying, we do this, we do that. I started drawing a picture out of it, right? And I'm going to share you that picture just so you get a perspective. Um, and it's a little daunting, the picture, when you see. So don't allow it to scare you. You guys are very smart, and you will figure this out very quickly someday if you come into this market. Okay, so are you able to see my picture?
Yes, sir, we can see.
Yes, sir, we
Okay,
can see.
so if you look at it, this is a hierarchy diagram. Okay, uh, there are different numbers, and these are various departments within a family office. And at the lowest level of that hierarchy, every bubble there, every circle or bubble, whatever I call it, a bubble chart, is a task. So there are over 300 here already, and I know there are another 100 that I could add as we have started serving many family offices. And so each is a task here. If I were to zoom into one or two areas, okay, so here is fund accounting. Is an activity. They have a lot of partnerships, these families, between families, and you have to manage the accounting of all these partnerships. There's transaction processing, paying all the bills, you know, there is all the data management, there's operations and reporting. So all these are subgroups of operations and reporting, right? And similarly, there's basically wealth structuring, there is sales and marketing. This is only if you are a multifamily office. There's relationship management, and there is basically investment compliance, entity compliance, investment compliance, trust administration. This is, as Rob was talking, I started to capture this whole thing and started to form a picture. So I want to know what they do. And then we developed a strategy. How do we do the implementation to begin with, right? So when we bring on a client in a company, think about it this way. This family office that has, say, 10 billion in assets around the world has a set of accounting systems, a set of document management systems, and data is all over, and we have to bring it all into a single system. And if you have a net worth, say, in your current environment that is, say, 10 billion, 10.2 billion and some pennies all the way, when I bring all your information over to our system, it should equal to exactly that figure. That means I've brought all your assets together, right? So I'm just going to switch back to my presentation. Just give me a second, right? So I realized this is not going to be an easy task. So we created this methodology that today is considered the best in North America. We haven't gone to Europe yet, but in North America and the clients we are implementing, there are some very large clients, and it's very well received. So I did that diagram, and there's a lot of other things I built. We are not going into that detail, but that kind of just gives you a picture of what happens in a family office, right? That picture. And now what happens is, I'll share you a little bit more detail. So the chief investment officer here, I've put some bullet: portfolio management, asset allocation, client philosophy and objectives, right? Each family has different strategies. Some have different philosophies, different strategies. Some are more real estate, some are more equity, some are more ethical, some don't care, all that, right? Risk tolerances and controls, right? Some families are aggressive, saying I can take risk. Some are saying I don't want to take risk. For me, capital preservation is everything. Liquidity requirements, based on the number of children, etc. Manager security selection, and manager and security selection here is, do I pick Fidelity? Do I pick Schwab, Goldman Sachs? Who do I pick? Quantitative criteria, qualitative, so they go through all that. Then there's a technology, how do you manage all this from a technology? And so, you can't manually manage all this now, right? And then there is administration, accounting, tax, transaction. You need to know cost of everything you purchased, so that when you have gains, you know that how much of that gain is taxable, under what rules, in what country, in what state. So you need to, all the time, the accounting team needs to know what is the tax cost, right? And then there's performance reporting, which is very complex. When you have a bank statement, you get, you see your interest in the bank statement and you see your principal, but these performance reports that we have cover all asset categories. So these billionaires can afford anything that is available on sale, right? So performance reporting is very daunting by itself. Just to bring all the data together to do a performance report, many family offices spend months. And tax compliance, planning, so all these things. And then you have bookkeeping, and then you have trust administration. They form various trusts, number of trusts, and you need to administer that and run those, and then all the compliance, right? So just to give you a little bit more detailed in what we discussed earlier, I'm just going to jump into some high level, at a very, very macro level, educator and mentor, because when you go into a family office from the founder down to generation 3, generation 4, they don't even know who the founder was. That guy is gone. And now, the family office is the single binding force. So they educate and mentor, integration of all financial strategies, manage risk, and transition. Prefer life's inevitable, right? So these are stuff they do. Now let's look at a little detail now, right? Typically, asset allocation. This is just an example I took out of one of our slides, right? Where does the money go? So if they have $1 billion, 10 billion, 100 billion, this is how it would spread. They're very little in cash from a percentage. Of course, for some of them, 2% could be, 20 million or 100 million of cash. These are people at a very different level. Fixed income, you can see a quarter of that is in fixed income. These give you return of less than 1% or sometimes 2%, but it's safe. Then US equity is high risk, high return. Then the non-US equity, that is, they invest in other markets around the world. And there are hedge funds and private equity funds. These are high risk, high return. This is probably the highest risk in their portfolio is a hedge fund and private equity fund. So for example, Eton Solution itself has received money from a number of family offices, right? So that is that line item that says private equity. Then they have real estate, and then the hard assets like aircraft, boats, jewelry, artwork, wine collection. We have one client that is tracking its wine collection on a system, 100,000 bottles of wine from all over the world. They just love wine, so they have their own warehouse of wine around the world. And so then you look at the bottom box, right? It's an interesting box there. These family offices have between 50 to 500 entities. So these are entities. So they want to buy a commercial building, they set up an entity. And the building is purchased by an entity, not by an individual family member. There could be multiple family members who have a stake in that entity, but the entity owns the asset. 50 to 100. Each entity has to maintain a general ledger. 100 to 700 custodian bank accounts, sometimes over 1,000. 200,000 securities of various marketable equities and all that, right? Now, imagine if you have to pull that together in one report. If you have to say how much I own today, you have to merge all that into a report. And sometimes family office just in the past, even today, if you don't have the right technology, they give the family this report once a year. It takes them 6 months to pull the data together, and the data is changing every day, right? The price of these securities are changing, positions, etc. So they can give end of the year report 3 or 4 months after end of the year. And some family offices give a quarterly report. That's it. And so that's the challenge. Now, in today's the younger generation, they want as of yesterday, right? They want it on an app, on a phone. So it's changing now with the newer generation. Okay, so let's go to another one. So these are questions that the family members have to ask. What is my net worth today? How are my investments doing, right? How many years will this money last? So they do cash forecasting, guys, in the sense, they say, if I give these benefits to my children and my grandchildren and their children, how many years will this money last? So they do forward projection for 130 years. Sometimes they do forward projection for 200 years, right? With some assumptions of number of children each person will have, etc. And what are the biggest investment risks? How is my portfolio doing against benchmarks? How much does each household own? Different subgroups of each family, each generation. Cash flow forecasting. They have a lot of cash flow forecasting requirement because there's so many bills they pay and there's so many investments that's bringing cash in. You need to kind of keep an eye on it so that you always have liquidity to pay for your immediate payments. Visibility restriction. We have a lot of family offices where one brother does not want the other brother or sister to know what he owns or what are the assets he has. So very complicated visibility restrictions, confidentiality, paying hundreds of bills every day. Are my taxes filed correctly? How to optimize intergenerational wealth transfer, tax optimization, how do I make sure I have sufficient control and risk mitigation? These are all the questions family office have, right? And then if you look at it, so how do you do that? So when you have that many accounts and all that here, right? I shared with you what we do at Eton. So Eton's technology platform, you see the picture here, is there's inbound feeds and there's outbound feeds. This is just an old picture, but it's not a fully representative. It is quite expanded now. So every day we get data from these banks and custodians into our system around the world. Every day it comes into our system. And so if you have to know how much money I have in all these liquid assets, you just come to our system and you click a button, it'll tell you. Previously, you had to go to these websites, download the statement or get that, and merge all the data. It was a massive task. And then we also do payment initiation and instruction outbound. So from our system, you can say, I want to pay bills. And you can say these bills from this bank account, these bills from this bank account, this. You just set it up, hit pay, it'll pay out. And you will always know when you want to audit it, you audit in our system, which bills you paid where, right? So that's one part of the technology there. So here's a look, all the things in the circles here on the left is stuff you do. And then on the right is how do you manage all this, right? So you need processes, you need people, you need system. Without process and system, just by people, it's not possible. It's just too much labor intensive. And so here, let's look at this example. This is just an illustration. There's a very, very, very simplified picture, right? So you have the founder couple, father, mother, the patriarch, matriarch, and their children, and sometimes generation 1, 2, and then all the entities. Then you have the accounts and the assets, and then you have reports, portfolio, all that you need, right? So in the next bucket, we have grouped all the legal entities and everything. So now you can see how everything comes together. So when you're operating this for the family office, you need to understand all the structure. You need to know every account. You need to know every asset. You need to know where it is, what it is, everything, right? So that's the task of a family office. So I'm just going to spend a few minutes here in what we did, So we built a system for a family office, knowing the challenges they have. It took us over 10 years to build it. And it's an integrated platform. So it's basically a family office usually is between 5 members to 15 members. It's a very small team. It's not 400, 500 people. It's just, so if it's an integrated platform, it's easy for them to see everything and manage everything and in one place, right? And implement workflow practices. So it'll say these type of bills, it should go to approve to these people. If a bill is over 1 million, it should go to approve to this people. So all the workflow is very dynamic, depending on what is the expense, what is the nature of the spend, and who are you paying to. The bills will go for different people for approval. Okay, and here, so you look at this. So typically, you have a general ledger, then you have an investment ledger for all the investments you do. And these are ABOR, IBOR, these are the terms we call assets, book of record, and investment book of record, capital. And there's a capital ledger and tax ledger. Typically, this is never, most companies, entities, they struggle. How do you keep this in sync? As soon as I purchase something, I sell something, how do I make sure everything gets updated? And so this is manually done. That's why it gets very painful, very expensive. In our system, it stays in sync all the time. We have all the ledgers. The tax ledger is still coming up. It's a deliverable this year. But over the years, we have built all those integrated into one system. So it becomes, that's the attraction of a system for why we are able to win these large deals, right? So then, basically in the front, Atlas 5, there's a tenant portal. We call it tenant. because it's a SaaS solution in the sense you don't buy the software, you just rent the software. It's a software as a service, right? It's a cloud-based application. So the family office uses the screen on the left. It's called the tenant portal. And then there's a client portal. The family members can use this directly, also access the information. We call it the client portal, and they can come in through a mobile app or a client or a iPad or a computer, right? So then in our organization, so how do we make money? So we have three areas, So we have we have a licensing charge every year that we charge our client. Then we have an implementation charge, and then we do services. This is where services is what happens is these clients are saying, you saw the bubble chart I shared with you earlier. So clients are saying, I have to do 300 tasks, and they're saying, can you do some of this yourself? So we are saying, sure. So we do, almost 70-80% of that, what you saw there, we do it for them. And that's the services team I have. They're all CPAs, CAs, etc. And then this last picture just gives you a little footprint. We have an office here where I live now. I'm from Bangalore, but I'm at the, last few years I've been here building the US team and the US organization I'm doing. And then I spend time in India building the India organization. So Raleigh Durham is in North Carolina, and then our center, another center we have is in Bangalore. Right? That is rapid fire, my slides. I think we have now time to take questions. I didn't want to do a death by PowerPoint. I have more slides, but I think that gives you enough to intrigue you with the subject, excite you, give you something to think about as you plan your own careers. And someday when you have a lot of money, so hopefully this will give you some idea how to manage it yourself.
Sure, sir.
And
Thank you
please
so
buy
much.
Atlas 5 when you do hit that 500 million level.
Hope everyone gets to that stage to buy that, sir. But thank you
Yes.
so much, Nimish, sir. So, guys, we are open for question and answers. So, if anyone have any doubt, you can drop a message in the chat box. Sir, I think we already have a question.
Okay.
So people are asking how to start off career into wealth management and what are the qualifications that the organizations look at?
How do you start your career in wealth management? Well, you could join Kotak Bank and they have a wealth management unit. And so that's one. So all banks have a wealth management team, a relationship management. So you could start there or you could join. It all depends on where you want to go. Or another option, is if you look at firms like ours, right? And typically, besides your accounting skills, wealth management per se requires, now there is wealth management is very broad. You saw my slides earlier, right? Are you in the accounting operations? Or are you in the investment advice? If you have to advise, you have to take other certifications, which are advisor type certification. And then if you're in the post-trade, what we call accounting, tax, consolidation, reporting, there are other certifications available in that. So you have to first choose where you want to be, and then you can do certifications that further enhance your skill. But being a CPA, a CA, in accounting, because at the end of the day, you need to know accounting well. So you already are there 80%, you need have another 20-30% is to get some specialized skills once you pick a track, what you want to do. Okay.
Thank you, sir.
The only difference in those roles, I might say, is if you're a wealth advisor and your advice is not good, you will get fired. If you're a CFO and you're just doing bookkeeping, the risks are lower. And remuneration might also go with the risk and rewards, right? So I don't know if I answered that question, but good question.
Sure, sir. And we have one more question from Abhi Kumar. The question is, any suggestions how lower or middle class income could start their wealth management?
How could start their wealth management? Okay, so if I understand the question, so if somebody, let's say, guys don't have 1 million or 10 million, but they have 10 lakh, 5 lakh, can they start? Sure, there's a market at every level, right? So the person with 10 lakhs also needs advice, needs help. And how do you start? The question is, how do you start? The only thing stopping you or succeeding you from starting that is, first, do you have the expertise yourself, right? So if you have the expertise yourself, that you have to first find a way to gain that expertise, and then you set up. You see, this wealth pyramid goes from billionaires down to the guy with 1 lakh. Everybody targets a different segment in that list. So if you choose the person with 1 lakh to 5 lakh or 5 lakh to 10 lakh, remember, typical fee, okay, that you can charge is 0.2%, 0.1%, 0.5% of the person's wealth. So if you target a person with 1 lakh money, the most fee you can target is 1,000. Okay, so the question then becomes your own ambitions, right? How many customers do you need to generate your revenue? Okay, so those are the questions you have to ask. But yeah, nothing's the thing that you first get the skill yourself, and then you can then take the skill to a particular segment of the wealth pyramid.
Abhik, I think your question is answered. So the next question is, I have been hearing a few words like ill-advised in wealth management. What exactly is ill-advised?
Somebody says buy Bitcoin. बहुत ऊपर जा रहा है आजकल. To me, an ill-advised is a person either who doesn't have the right qualification, right, or who doesn't know what your objective is, right? So first of all, if your objective is wealth preservation, or if you say my objective is I want to gain 10% a year. So once I know what is it that you want to achieve with your wealth, I give you an advice and I'm qualified to give you advice. It's generally good advice. Ill advice is, I just rattle out something and I don't even know what you want to do with your money, and I just say ye le lo, and I'm not qualified to give that advice. And that would be ill advice. It's the quickest way to go down the pyramid, from guy with the crores to lakhs and guy from lakhs to thousands. And that happens in America, in many countries. Every year, America, we create 1 million millionaires, and we have 1 million millionaires who are no longer millionaires. So a lot of people go up and down that list.
Sir, there's one more question. Sir, how can we differentiate risk capacity and risk tolerance?
Differentiate risk capacity
And risk
and
tolerance.
risk tolerance. Okay, it's a very technical question. I don't know if I'm the best expert to explain that. Risk capacity, if you think about it, when you're talking, if I'm an advisor, which I'm not, but if I'm an advisor and I'm talking to somebody and very early in a relationship, and I say, what is okay, you have, I don't know, I'll throw a number, say you have 10 crores. What is your risk capacity? The person will say, I give a picture. Socho, you invest the money in something who somebody says double ho jayega, triple ho jayega. So you feel very excited that 10 crore becomes 20 crores or 30. Then I will tell them, socho agar wo decision खराब है और वो 10 crore अभी 2 lakh बन गया. And I'll see their face, I will know the guy is now very, very sad. So the risk capacity is established there. Is what is the, it's nice to gain in investment return, but what is your capacity to take a loss? And how long can you, so let's say that investment that you made is down, and it may remain down for 3 years. Are you okay to hold on to it for 3 years? Right, risk tolerance then is each investment class. I have so many investment classes I have. Each has a risk tolerance. Equity, for example, right? It can go up and down 30% in a year. But if I have US government bonds, it doesn't go up and down 30% in a year. So basically, each of those asset classes have different risk tolerances. And then you can then accordingly say, okay, you know what, I want 30% of my money in US government security. That is very safe, backed by the US government. And I know my 30% will stay, right? So then the remaining, you put it into more riskier assets. But you do need return. So some part of the portfolio, they put into private equity and hedge to get returns, you know. Yeah.
Thank you, sir. And we have one more question. Will financial planning and wealth management kick off in India as a separate profession itself for middle income class and lower class families? Sir, I'll repeat the question again.
Yeah.
Will financial planning and wealth management kick off in India as a separate profession itself
For middle class or
for middle
lower
class and
income?
lower class families?
I doubt it. Okay, think about it. You're advising somebody with 3 lakh or 3 lakh net worth, or say, you know, some poor family. The person advising's salary expectation, if it is 5x of that person, is not going to work. You know what I mean, right? You know, um, you're opening a restaurant and you want to make certain money, and the person who's coming to buy has a budget of 10 rupees or 20 rupees. You'll have to serve 1 lakh a day to make some money, right? So I don't think lower income there's any financial planning. I mean, I think for them the financial planning is required when it is gets complicated, right? If you have 2 lakhs, you're going to just put it into a fixed deposit. If all you have is 2 lakhs or 5 lakhs, you're going to put it in fixed deposit. You put it in a stock market and it crashes 30%, you will be very unhappy. It might affect immediately what you eat and what school your children go to, right? So planning is only comes when you have investable assets beyond the immediate emergency funds that you need to keep aside. So I doubt, you know, mm, my doubt.
That's the reason most of the people go to small CAs and right, sir?
No, that is just for, so you go to small CA for tax advice. You don't go to a CA for wealth advice, you know.
Yeah. So we have one more question. What are the major chunk of jobs created by your firm? What qualifications do you expect while hiring? I think
So okay, so our technology team is so if you look at our headcount now, we are about say 300 people. It's about 270, 280, but I'm going to round it to 300 people. 100 people are in technology, and 175 are in what I call implementation and services. Okay, so if I were to just go back to this group here, so the technology on the left here is about 100 people. Implementation and services is 175. If I extrapolate the next 6 or 7 or 10 years, the biggest team I'll have will be services. That'll be thousands of people. Okay, and this is the team that is doing all the work. The my CFO's team, the controllers, the tax expert, someday the wealth advisors, everything. That's the team that is doing the family office's work, right? So that in order to grow there, if that's what you want to grow, then yeah, you need a strong accounting foundation. And on top of the accounting foundation, you are picking another specialized route in that, the investment route, the accounting route, or the tax route, and then you take further certifications in that. And some people do multiple. They go in this track for 3-4 years, and then they switch track and they learn that as well. So someday, if you want to be CEO of a family office, it's good you know every aspect of the business, right? You need to know the investment side, you need to know the tax side, you need to know the accounting side, you need to know the operation side. So yeah, I mean, you know, you just have to keep learning various aspects. I mean, if you want to be a CFO or a CEO of a family office, you know.
Sinha, I think sir has answered your question. So we'll take last two questions, sir.
Okay.
So the next question is, hi sir, what has been your experience with automation in wealth management?
It's good. it's happening a lot. I mean, of course, that question is very broad. What do you mean automation and wealth management? Is it investing automatically, or just gathering data and reporting, right? Post investment. I don't think there is really automation in where should we put the money. That still needs discussion and advice, because investment objective varies from person to person. But there is a lot of work happening, a lot of technology happening and of course there's a lot of automation technology being developed in developing advisory tools, client, investment advisor tools, based on what's happening in which part of the market for commodities, equities, everything, right? And anytime there is a lot of data, there's an opportunity to optimize with technology. So you have pre-trade a lot of data that you look at before you invest, and post-trade there's a lot of data that you need to manage and analyze. So there are technology operation in both pre-trade and post-trade, and that's where all the intellectual property is getting created. So Eton is an intellectual property company. So if you see today in the global top 10, it's all companies with intellectual property: Microsoft, Apple, Google. So the most valuable thing today is not the building, not the land, it's the intellectual property. Just to give you an example, the airport that you guys, you know what an airport is, right? If you have an Apple iPhone, you have this thing that you put in your ear. That sales is 27 billion, just slightly below Tesla, and more than most of the technology. So if you are in an intellectual property, the valuation of your business is astronomical. So for example, Eton's valuation is 20 times revenue. 20 times revenue. So if my turnover is 1 crore, I can sell my business for 20 crore because of the intellectual property, right? So I think that question is interesting, because if you want to make enormous wealth, build an intellectual property that can be used globally, right? There's a lot of data pre-trade, a lot of data post-trade. Understand that, master that, and then build a team. Take one niche, build a tool. You're 100 millionaire easily.
Thank you, sir. And there's one more question from Abhik. If lower income groups want to start investing their money in the financial markets instead of financial institutions, then how they mitigate risk?
No, you'll have to come by again one more time.
Sure, sir. I'll repeat the question. If
Yeah.
lower income groups want to start investing their money in the financial markets instead of financial institutions, then how can they mitigate risk?
What is the difference between financial markets and financial institutions? They're the same. I'm not sure if I follow the question. Financial institutions and markets. I thought so. If you, let's assume you put your money in mutual fund. So whether you buy it yourself or buying a mutual fund is financial market. You are in the financial market. Even opening a bank account, you're in a financial market in a way. What the Modi government did at the very beginning of its last term was to bring everybody with a bank account. Because if you have a bank account, you can open a demat account. Because you have to link you can't open a demat account without a bank account. So if you have a bank account, you have a demat account, you can move money from your bank account to demat account and trade, buy a mutual fund, right? So yeah, sure. If you have a bank account, open a demat account. And once you open a demat account, in small ways, I like that ad, mutual funds here. So if you look at it, you just invest 50 rupees a month, 100 rupees a month, whatever you can. And it's the culture, it's the education. You learn as you invest 100 rupees, 1,000 rupees. And that's the whole, I'm hoping. Statistically, if you see, the number of demat account opened in India in the last 3 months was 1 crore. If I remember, if I remember some of the article, 1 crore demat account got opened in the last in the April, May, June quarter. So there are 35 lakh demat accounts being opened in India per month. So it's happening, in my opinion. All these are people with investable assets of thousands of rupees, not even lakhs. But so financialization of India is happening, and India is still a long way to go, in my opinion. If you look at amount of money in gold and land is still disproportionately high. If that goes into markets, then actually that generates the business, right? So when you invest in a company, buy a share, and you invest in an IPO, what's happening is that money is helping fund the company's growth. And if you look at Amazon, they were raising money for 10 years. They were making losses every year for first 10 years. Now it's the most valuable company in the world, because it's, again, intellectual property driven. They were growing rapidly and they were having losses for 10 years. But somebody kept funding them because they knew iska share price aayega, ek din will make money. And so investors poured money into it, billions of dollars. Every year they were making 10 million loss, 10 billion loss, 15 billion loss. So even then people, you talk to a typical Marwadi, he said, yaar, ye nukshan hai, isko band karo. Or a Gujarati, they won't understand that, right? It's an intellectual property business. You are taking the market. And during that phase, in like Eton, we are not profitable. We just did our third round funding, and we won't be till we hit a certain scale. And so, because building that intellectual property, that property is 100 people in the technology is expensive. We spend 70, 80 crores a year in that technology. So just some perspective. Good questions otherwise.
Sir, we'll go for one last question. The last question is from Rizwan. He asked, where do we see Eton Solutions in India in next 5 years?
There are two things the two parts to question. One is we use India as a delivery arm and India as a market. Okay. At this stage, we have no plans to come to India as a market. Our system does not have white money, black money capability. It is not very smart. थोड़ा simple है, सिर्फ white money करता है. So, and also the challenge we think in Indian market is even the rich guys don't understand that intellectual property costs money. So our software is expensive. Okay. And like any businessman, you make it at the lowest price and you sell it at the highest price, right? So I'm using India to make it at the lowest price. Then I'll find customers in the world who will buy it at the highest price. And so India, from a delivery and support global, it's going to grow very heavily. So we could have thousands of employees from our current headcount. But it is not in our business plan at the moment. But these things change year on year. But we are looking at Singapore as a market. There are 500 billionaires there. We already are in New Zealand. We could be in Australia soon. So it's we're still very small. We're very small. We were just 20 people a couple of years ago. We are now about 300. So it's still and absorbing so many people and market is still, it's a lot of hard work still in front of us. So we have a long way to go. But hopefully, someday if our Indian customers are using our product, or at least to manage the white part of it, I'll be happy.
All right. So, sir, I think we have completed all the questions.
Okay.
So, yeah. So thank you so much for the absolutely superb session, sir, as usual. So we had a bit expectations, and it was more than 200% above the expectations. And thank you so much. And the examples which you gave are really simple and very easy for our students to understand the concept. And on the occasion of Guru Purnima, sir, thank you so much for being our guru on this day.
Thank you. Okay, so good luck to all the students dialed in. You will do very well in your lives, not to worry at all. And so so good luck and aim high, aim big.
Okay. Out of my curiosity, I just want to ask you one question. Sir, is there any tagline or the something like we say that tagline for Eton Solutions?
We tagline. I don't think we have a tagline. I mean, it's simplify the complex is what we internally go by. But otherwise, yeah, we don't have a tagline. It's difficult. We tried when we came up with this Atlas 5, this whole logo. We discussed that, but we couldn't think of one good tagline. So I guess someday it might happen. I don't know. So it's, our website used to be very, very basic just 6 months ago. Our money was just going into the product. We had no money for anything else. So when we can afford somebody who can come up with a good tagline, we'll do that.
Maybe our students will get a good tagline.
Oh, who knows? Yeah, if they have some good suggestion, please send it.
Sure, sir, definitely. And thank you so much, sir. That was a
Very
great
nice. Yeah,
session.
no,
And on behalf of all the students, we wish you a very happy Guru Purnima.
Thank you. Thank you.
And we are very fortunate to have you on such a special day for us.
Yeah, no, is it good? And thank you for the institution. I mean, it's nice of you to, just reach out to me and set up this because, I mean, it's a perspective that the students would have never imagined this market existed for them to think about, as a career. Yeah.
Maybe that's the reason we are not getting much questions on this also. So
Yeah, but nobody knows. Yeah, correct.
yes, sir.
So, I'm hoping some of our current employees or future employees of somebody from this group is a CEO of some family office one day. And he says, the first time I heard it, some guy, Nimish, told me about it.
Definitely, sir. Sure, sir.
Very good.
So yeah,
Thank you
so much, sir.
Take care. Thank you.
Take care.
Thank you, Nimish sir. Thank you so much.
Thank you. Thank you. Bye.
Thank you, Surya.